Go interactive with X-Ray, where we bring trading experts to you live in the platform. Choose sessions, watch live market analysis, and catch up on your favorite market insights anytime. Ask questions and go one-to-one with leading experts on gold, oil, FX, crypto, indices, and equities. X-Ray, your very own analysis team, right at your fingertips. That's higher trading from MarketsX. Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
Good day, good morning, good afternoon, everyone, and welcome to another busy day in the markets with InstructFX. My name is Andrew, and today I'm bringing you the latest news from the markets along with Rian Hobson before the opening bell. So buckle up, hit that subscribe button, and let's get started. Just before we get started, I want to rest assure you that anything you hear and see during our live talk shows does not represent investment advice nor solicitation to buy or sell CFDs or cryptocurrencies. Financial instruments are complex products that carry high risk, so you better do your own analysis before making any investment decision based on your own personal circumstances. With this being said, here's what's happening in the markets on this beautiful Tuesday, 17th of August, 2021. The US stock markets are expected to open to the downside today after closing yesterday's trading session at record highs. We see the Dow Jones Industrial Average trading lower before the opening bell, 0.6%. The S&P 500 also traded to the downside today, dropping 0.4%. And also the Nasdaq futures traded lower, 0.3%. The euro and the pound weakened on the European trading session today after the gross domestic product in the Eurozone dropped below consensus expectations, coming out at 13.6%, which is 1 basis point below predictions. And even though the unemployment in the UK dropped to 4.7% earlier on, which was better than expected, the pound seems to be missing the buyers so far. The US dollar index gained on the European trading session today, eyeing the $93 mark against its other peers, with the Aussie dollar and the Kiwi dollar making record losses against the greenback. New Zealand reported its first virus case infection since February this year, and the Prime Minister reported a 7-day lockdown in the country. The meeting minutes from the Reserve Bank of Australia surprised the markets by sticking to its plan to start tapering bond purchases, and it would be prepared to take decision against if lockdowns across the country threaten a deeper economic setback. In the cryptocurrencies markets, we have the Bitcoin holding steady and trading just close to the $47,000 mark. And Ethereum also traded higher today, little over the $3,200 mark. Now, we have some news from the commodities markets. We saw crude oil WTI trading to the downside today on the European trading session. And Rian Hobson is bringing us the latest news from South Africa and from the commodities markets as well. Rian, very good afternoon to you. How are you, first of all?
Good afternoon, Andrew. Very good. Cape Town is warm.
It's warm, finally. You're happy. How is South Africa doing today, Rian? What's happening with oil?
South Africa is doing well. It's not that warm. It's actually cold. You can see I'm sitting with a scarf on here, but we're getting there. With the commodity markets, look, it is a bit confusing here, but it's all to do with the US tapering, I think, or the words that goes around the US tapering. As we look at, this was actually the confusing part with gold. The gold rebound on some safe haven interest as US yields ease. Now that was yesterday reported. And then today, it was a whole entire different story. Gold investors warned by UBS, get out before price go down. Totally different story. And I think the confusion come in is more to do with the US word of tapering that is spooking the market now. On your oil front, that is actually quite interesting. There is more to do when it comes to supply. I think since Monday, you could see after the Chinese industrial production news came out, that was bad. It was a triple blow for China actually on Monday. And then on top of that, we have the surge that is going on in New Zealand. It started to happen where the new variant is going around in New Zealand. China is also another problem. Harbors, actually the third largest port in China, that actually was also put in contact with one person that was testing positive. And all of those negative news is just actually ringing a bell in the market to think, whoa, it will be the same as last year. And also, let us say oil settled lower, bears losses despite weaker economic data. Now, that comes now from Reuters. The economy is based, I would say actually when it comes from China, the economy is basically battling on that side. And I will not be surprised. I will not say it will be like last year where we get a heavy drop in oil where it goes to zero. But I think we might see a bit of a downward pressure, maybe possible in oil due to all this negativity that goes around with the new variant. Natural gas, as I said the last time, with natural gas, it's all to do with demand and supply. We all know the surge in natural gas during the summer in the Northern Hemisphere. And possibly just a possible retracement in oil prices, but we will see actually winter later this year in the Northern Hemisphere. And possibly that might push up or maybe give a bit of relief to the natural gas. On the other one, this was last Friday, on the soft metals, on wheat. Oh, my man. Wheat was actually on the rise on Friday. That was where it came in with the US having a shortage in production of wheat. And that pushed up actually the wheat prices on Friday. But I could see it was hitting actually quite a heavy resistance on the soft metals. Sorry, not on the soft metals, on the soft commodities. If I just go there to wheat, if I go to the daily, you could see it was hitting that top, and now it's just retracing. I think it's maybe just a possible retracement, maybe not, but we will see. Andrew.
Right, and we're gonna see what happens after the opening bell, Rian. Now it's time to open the day. My favorite line, beautiful people. From Europe to South Africa, from Limassol to Cape Town and London, this is InstructFX News. US markets open, coming up. Stay tuned. Right, good day, good morning, good afternoon, everyone, and welcome to the opening bell. We are about 20 minutes ahead of the opening bell. We had a quick review of the topics of the day. We saw the commodities news, and now it's time to have a quick look at the economic calendar and see what's expected to happen in the economic calendar today. We have quite a big day in the economic calendar. There we go. Yes, so we saw the average hourly earnings and the unemployment rate in the UK coming better than expected. Inflation numbers from the Eurozone, which surprisingly came out as expected at 2%. And after the opening bell, we're going to have a few announcements. We're going to have industrial production coming out from the US in 1 minute from now. And we're going to have business inventories, and the Fed chairman, Jerome Powell, will have a press conference at 8:30 GMT plus 3, followed by, of course, the API weekly crude oil inventories. So we should see some movement on the U.S. trading session today. On the earnings side of things, we saw the earnings calendar taking a breather. The earnings season is coming close to an end. Today we saw Walmart and Home Depot reporting. Earnings per share better than expected for both Walmart and Home Depot. And also in terms of revenue, we're looking at $141 billion. for Walmart and 41.12 billion from Home Depot. Good numbers so far in the earnings calendar. Now, let's take a 30-second break, and then we're going to come back with the gossip of the day, guys. We have something going on in the world which is very, very interesting. Join us in exactly 30 seconds with the gossip of the day and with my very special guest for this afternoon. Stay tuned.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.
Right, now, as I promised, we're going to have the look at the gossip of the day, and then I'm going to welcome my guest for today. So there's the headline that got my attention. Frustration grows in Washington over the situation in Afghanistan, and the U.S. President Joe Biden stated yesterday that we could have done more regarding the situation. For the people joining us now, after over 20 years of American troops in Afghanistan, following the troops' return home, in only 10 days, we saw the Taliban taking over Afghanistan's capital, Kabul, and other cities in the region, forcing tens of thousands of people to flee the country. Also, the Afghani president fled the country yesterday after the Afghan government capitulated to the Taliban, and the president stated that he left the country to avoid any more bloodshed. The images released by the news channels are absolutely mind-blowing and unprecedented, where thousands of people, tens of thousands of people are trying to leave the country by any means, even if some of them lose their lives by trying to do so. A U.S. official told Reuters that the U.S. administration so badly misjudged the situation that the State Department flew a regular rotation of diplomats into Kabul last Tuesday, even as the Taliban advanced towards the capital. Now, absolutely mind-blowing what's happening, and this will probably have a very interesting impact on the economy in the Eurozone, on the economy in the UK, and on the US dollar as well. Now, Rian, first of all, what's your take on this one?
Oh, it doesn't look good at all. What I'm more afraid of is the fact that all that state-of-the-art equipment is still in Afghanistan, which was actually given for the soldiers. And so we can actually say, we can maybe predict with a high possibility that there might be some attacks coming from Afghanistan with these guys are sitting with all that equipment.
Well, I doubt that the Taliban in Afghanistan would dare to attack the NATO forces, let's say. However, after 20 years of American troops in Afghanistan, in only 10 days after they left, we saw the Taliban taking over the country. This is mind-blowing what's happening. Last night, I saw Joe Biden actually saying that America's job in Afghanistan wasn't to rebuild the country. And if the Afghani people don't fight for their own country, why should the United States? And that statement was very, very interesting. Now, joining us live from London. Thank you, Rian. I'll be with you in a few minutes. Joining us live from London, we have Andrew Sachs, Head of Research and Analysis at ETX Capital. Andrew, very good afternoon to you. Please move to the camera. What do you make of the situation in Afghanistan, Andrew? What's your take on this one?
Hi, Andrew. Well, actually, it's quite interesting. If you think about it, this is not a new circumstance. It's been like this for quite a long time. And in fact, if you look at the history of the country, it goes further back than 20 years. 20 years is just where the Western aspect of things comes in. And a lot of Western countries, they think, a lot of people in Western countries think, there's been a Western involvement in Afghanistan for 20 years and it's destabilized the country. That's not really the case. Afghanistan has been unstable for a very, very long time. If you go back to the 1970s, it was this, and you ask anybody who was in the Soviet army in the 1970s, what they will tell you the same as what the US army will tell you now. The Soviet Union had to intervene when it was when Afghanistan was a socialist country, and it was a Democratic Republic of Afghanistan. The Soviet Union had to intervene with it, to the extent of actually the Prime Minister of Afghanistan being assassinated by the army. So, and then when the Soviet Union finally had enough of this massive headache of all the infighting and violence and trouble that was going on inside Afghanistan, they pulled out, and then Afghanistan fought among themselves for many, many years. And then the Western governments came in, and there was fights between. So it's been like that for a very long time. So I don't see, as far as the actual global economy is concerned, this is very interesting, because Afghanistan is one of the poorest countries per capita in terms of the actual people. The population are very poor. The average GDP per capita, nominal GDP per capita in Afghanistan is $200. That means that the average annual salary of an adult person in Afghanistan is $200 a year. That's just incredible. It's down there with Somalia and Ethiopia and places like that, but with much more unrest. So bearing all that in mind, there's sanctions, and people with Afghanistani passports can't get to other parts of the world to live. So there's no economic effect at all by anything that can possibly happen in Afghanistan. The only thing that is interesting is that Afghanistan itself as a country is a country of huge natural resources, and one of those resources is suddenly in demand. It is lithium. It's a precious metal.
Very well point. Very
much so. Very on trend right now because of the battery manufacturing for electric cars. All of the sustainable energy drive within Western governments, and United States and Europe and certain other parts of the world, Western countries are leading this by this diversified energy drive towards getting away from fossil fuels. And Afghanistan is a huge resource base for all sorts of precious metals like palladium, gold, and specifically lithium carbonate. And that is what you make batteries for electric cars out of. So you could, in fact, if it was possible to go in there, you could mine the lithium, and it would empower the country again. It would then perhaps disempower the Taliban. The reason the Taliban have got so much power is because people in Afghanistan, they've been allowed. That's right. They've been allowed. And people in Afghanistan don't have the resources or the strength or the capital or the infrastructure. In the 1970s, we're talking about the Soviet period, 1970s, after the Soviet Union left, the Afghanistan army that took over used a scorched earth policy. They destroyed all of the infrastructure of the country. Like 90% of the infrastructure was destroyed by their own people. So since then, there's nothing left.
Yes, to cut you off, looking at how things are going now, probably the situation will be even worse. We saw the situation in Kabul all over the news, and the other day were thousands of people desperate to leave the country by any means, and some of them lost their lives on live TV. Yeah. What is the impact of this situation on Europe, Andrew?
Well, the impact on Europe is probably not so much economic, because you're only talking about the European Union is 28 countries. And if you include England, which used to be part of the European Union, you're talking a population of around 500 million people. It's more than the United States, just about, like 100 million more than the United States. And these economies are very strong economies. The UK, for example, is still very strong now, and the FTSE 100 index is huge. Now, obviously, most of the natural resources are being imported into these countries. Things like crude oil and commodity raw materials are imported from either the Middle East or places like Afghanistan. If it wasn't controlled by the Taliban and it was open to some degree of international trade, it would be a very good trading point, because all those materials right now are very much in demand, like for making batteries and so forth. But what I do see, you see these people you see on the news coming on, trying to escape. It's only a few thousand people. It's not very many people. And most of them are it's not a very nice thing to say, but they're fighting age young men. They're not families and refugees. They are young fighting age men. And what they are is effectively people who are going to go to Europe and do what they would have done in Afghanistan,
Exactly. Therefore, my question, how does this situation affect the euro? Do we see any short-term, medium-term impact on the euro, Andrew?
No, I don't think so. I think that we've seen over the last few months, over the last year and a half, in certain European countries, how much the government is prepared to bankroll people who don't work. You know, you've got these in England furlough schemes, which is people who are on 80% of their salary for a year and a half, and it keeps being extended all the time. And nobody says a word. Nobody says, "Oh, we need to get people back off these furloughs because it's going to bankrupt the country." They just keep giving more money all the time. So giving a small amount of revenues to of income to these very few people isn't going to cost anything. If you look at the pound today, the GBP USD is still 1.39. It's been like that for months. There's no volatility at all in those major currency markets. So I don't think it is. I think what you really have is the economy will not be affected one bit by any of this. The only time it would be is if the government starts sending the army to Afghanistan, which they won't do. They've done that before and they won't do it.
We
We
don't
don't
know
know
yet.
yet. We
I'm
don't know
asking
yet.
you
But it's
because
very unlikely.
most people that are fleeing the country are looking to come to Europe. Yeah, and this
Yeah.
is what statistics showed us in the last few years.
That's
Now,
right.
even more than that, more and more are targeting the United Kingdom
Yes,
to
true.
reside. So this is why I'm asking: are we going to see a bigger influx of immigrants from that side of
Yes.
the world?
Yes, I believe we are, but I don't think it will be that many. You know, you're talking about just a few people. Afghanistan has a population of 33 million or something like that overall. And the majority won't be leaving the country. There's no way out. There's sanctions. You're not allowed to cross borders. There's no possibility of getting visas on the normal
Yeah.
by the normal course. The only way is to do what you've just seen on the TV, people trying to grab a quick opportunity and risk their lives in doing so. But also, those people are not going to be functioning members of the economy. They are young 25-year-olds who are going to potentially wage war in a country that they're going to. So I don't think that's even any analysts in any economic capacity in any government in Europe will not be saying, oh, look, we've got a few thousand 25-year-old Afghani people coming to the UK who are going to come and work in construction or in banking or something like that. That's not going to happen. They're not, first of all, they're not allowed to work here. Secondly, they're not coming here to work.
Yeah, they're coming there to basically to get out of the country. Now, we know it's very difficult to integrate masses of people, into society. So, you know what frustrates me when I saw Joe Biden's statement last night that said our job basically wasn't to help them rebuild the country. Then what did you do there for the last 20 years? And how is it possible that after 20 years of fighting, you didn't win, first of all, and second, in 10 days after you left, the Taliban took over? I don't know, to me at least, and probably to many other people, this looks like the Taliban knew exactly what they were doing. They're
Absolutely, they did. That's
more
for sure.
than an army, more professional than an army.
Oh, they're very organized. People don't realize that. They are not just snipers on a mountainside. They're very organized, and they've been around for a very long time, and there's a lot of people involved in it. They grow up with it. Everyone is schooled in that fashion from a very young age. It's highly well organized, and certainly when it's very naive of any Western government or Western business to think that, oh, we were there 20 years to stabilize it. No, that's not what this was about. It was there to see if any interest could be established in the region, and to
Yes.
perhaps make some kind of alignment, and then what you then have is human resources and raw materials. So if you look at the one of the reasons why Afghanistan in the 1970s embraced communism and joined the communist system of the Soviet Union one of the tenes of that was why they actually agreed to it was anti-colonialism and anti-foreign business was what were two of the key tenes of going towards socialism. They wanted anti-colonialism, which means they were worried about developed countries coming to Afghanistan, taking oil and gold and raw materials that they didn't have the infrastructure to dig up and export. They wanted to retain those in the country, and it was a socialist system of saying, well, we're in favor of keeping the interest of workers and working people in Afghanistan by stopping the pillaging of all those raw materials. So you have there a clear, and this was 50 years ago, a clear constitution, socialist constitution, which was voted in unanimously because people very poor people in Afghanistan wanted to try to maintain their sovereignty and their own property. And you can fully, I mean, I despise socialism just like anyone else, but you can see why that went down that route, really, can't you? You can see why it was in the interests of the people there. So anti-colonialism is a key tenet of Afghan way of life. So of course it's not going to be welcome if somebody says, okay, well, we'll instill a Western government, we'll give you democracy, which they don't want, and we'll give you a business environment, because what that really means is a Western business environment where you can export those products and make car batteries out of them in California.
If they're interested in doing that. How do you see the situation evolving in the next 6 months, Andrew?
Well, I don't think there's going to be much difference to what you see now. I think it will be a case of lots of militia, lots of instability. I don't think there's going to be any investment into the region. I don't think anyone's going to go there and try to stabilize it by building business and trying to improve the economy, because it doesn't have an economy. And it's got sanctions. The only thing of interest there is these raw materials. And, we seem to be taking a backward step in some respects, because, we've gone down this whole influencer-driven electronic markets world over the last few years. But now, because of the climate alarmism that's going on around all the G7 nations, they have all these climate alarmists now who's standing up on the stage talking all sorts of, the climate is dominating their dialogue. Then you have now all these companies, mining companies, going hugely investing in lithium exploration and all the materials that you make sustainable solar panels and things like that out of, for domestic power supplies. Those are the sorts of materials that are in Afghanistan, and I think that is the only hope it really has is a raw materials base. Iran, for example, in Iran, people speak roughly the same language as they do in Afghanistan. They speak Farsi, and it's got a lot in common. There's also an Islamic dictatorship for the last 50 years, ever since 1979. 45 years. You have also there as much of a dictatorship and a fundamentalist anti-Western government as wants to enrich uranium and threaten the West with all sorts of things. But they don't threaten the West, and they don't do a war despite the sanctions, because it has an oil industry which is still very much part of the Western oil industry. United States, China, all of these developed countries that are industrialized by Persian oil. And that is what has stopped any calamity happening, in my opinion. Otherwise, it would be no different to Afghanistan.
Do you see the US troops heading back to Afghanistan to try and sweeten up the situation?
Well, that is possible. That is possible. But I don't think they'll go there for the same purpose this time. I think that would be just a case of trying to stop any long-range attempts at long-range warfare or something like that. I don't think there's any, but you see, it's destructive. No one wants to spend money on this now, and there's a big not anymore, and there's a big anti-sentiment. There's a big we've just been through the government's locking everybody down, and people have lost their businesses. Now they're going to say, do you want to send your children to the army? It's not really very welcome. I've got boys, and they have to do the army. It's the law. And I don't want them doing that. It's not safe, and doesn't serve any purpose. And here we are back to the same where we were 20 years ago. So it's not, and nobody's benefiting, and you don't have, and so basically, in short, unless the raw materials can be in some way harnessed. Look at Iran, for example. It's not Western countries running those raw materials bases. It is the Iranian companies and the Iranian government that are doing that. And they're doing it in a way that we can really say we've got the sort of best we can hope for at the moment, in that there is a trade dialogue there, even though there's no diplomatic relations anywhere with a Western country and there are constant threats. But that's all they are. The country itself does produce and does manufacture a raw material that's very much in demand, and it's now up to almost $75 a barrel. It's got, the oil consumption is massive all around the world, so that has kept the peace. If you have gold being exported from Afghanistan, if you have lithium to make batteries, you see the Taliban, they might need money at some point, so they might start extracting that and selling it to the West. That would stop it would be a Cold War if that happened, and that's probably the best we can hope for, really.
Yeah, true. Very, very true. Right, let's see what's going to happen. First, before we talk about them exploiting natural resources, they got to get a government yet to try and rule the country somehow. Right, Andrew Sachs, thank you ever so much for today.
Thank you, Andrew.
I'm looking forward to the next one, and I'm definitely gonna invite you to the next one. Now, let's take a 30-second break, ladies and gentlemen. We are exactly 1 minute ahead of the U.S. markets open, and let's see how the markets open today. 30 seconds, and we're coming back live with the U.S. markets open and the charts of the day, of course.
Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
Right, ladies, gentlemen, traders, 3 minutes after 4:30, we are already 3 minutes into the U.S. trading session. Let's see how the markets open today. We're looking at and how the markets performed on the European trading session as well. Right, Rian Hobson is joining me once again from South Africa. We're going to have a look together at the signals of the day and the charts of the day. Rian, good afternoon once again. Right, your favorite crude oil WTI, a few minutes into the U.S. trading session, $67.08. We see a bit of a push from crude oil WTI to the upside after it pushed downwards on the European trading session. Were you expecting this?
Not at all. I was expecting something to actually go down.
Exactly. Well, this is what happens at the opening bell, and that's why it's so interesting to witness the U.S. markets open, because we see all this beautiful volatility that's happening. And half an hour, 1 hour into the U.S. trading session, probably assets will start calming down. Right, moving on. The euro versus the U.S. dollar is trading to the downside the entire day, 117.35 and dropping as we see. Right, a lot of weakness for the euro versus the US dollar. GBP USD trading to the downside, 137.62 and dropping as we speak. RSI off the charts almost in the oversold levels. Stochastic again pointing downwards, almost off the charts. USD JPY started trading a bit higher once the opening bell happened. 109.47 for USD JPY. We might see a bit of a correction happening, judging by the relative strength index pointing downwards. Okay, but we see a divergence between indicators there. Stochastic is pointing upwards. The relative strength index is pointing downwards. We need to let the market breathe for a bit. Right, Aussie dollar, just like the European currencies, trading to the downside and dropping 0.7273 for the Aussie dollar versus the US dollar this afternoon, with both RSI stochastic off the charts into the oversold territories. USD CAD took a breather for now. We seem to be witnessing a bit of a correction for USD CAD, 126.11. For USD CAD, RSI stochastic turning around from the overbought levels, indicating a bit of selling power. Let's see what happened with the Dow Jones Industrial Average and the S&P 500 at the opening today, opening to the downside as predicted. 445.080 for the S&P 500, RSI pointing downwards, stochastic pointing downwards. Dow Jones, big tank for the Dow Jones, 35,334.26 and dropping by the looks of it, again with both indicators pointing downwards. Right. Are we going to see a sell-off, Rian? What's your take on this one? Just a small correction of the market or a sell-off?
I expect more on, I don't know, a sell-off, but I expect more something from Jerome Powell. That is what I would rather wait for Jerome Powell. And then that is where I will make a decision.
Probably, yeah. Probably this is what the markets are waiting for as well. Another hint, yeah, that we're gonna move closer to tapering. Yeah, the very easy, the very soft, yeah, monetary policy. Right. Let's move on. Let's see. So Dow Jones trading to the downside. The S&P 500 opened to the downside as the markets promised. Let's have a quick look at Apple, which opened on a positive note this afternoon. $150.88 for Apple. Let's see how it's going to close. We're looking at Amazon opening to the downside, 3258 on the dot for Amazon, with RSI indicating a bit of weakness in the markets, not making it all the way up into the overbought levels. We see stochastic turning around at the bottom of the chart, so the pressure is on. We might see the US stock market selling off sharply today. NVIDIA, $196.10. We see a negative opening and dropping, yeah, with both indicators pointing downwards. From what we see, we have an interesting support level for the price here. Okay, and if we see that level broken to the downside, then probably traders will eye the 188.57, okay, for NVIDIA or somewhere in that region. Right, the US dollar index traded a bit higher on the European trading session today. It only started pulling back after the opening bell, but it's inches away from the $93 mark, yeah, that it was eyeing earlier on today. 92 and rising. Okay, so we're gonna see that 93 level probably hit anytime now. Right, what's happening with gold futures? There we go, 1793.45 for gold futures this afternoon. Again, we can see a bit of divergence between indicators, with the relative strength index pointing upwards, and we see stochastic pointing downwards. Okay, so only time will tell us which direction gold futures will choose. Rian, by the way, are you trading commodities today? Are you on the markets with anything?
I'm actually looking at commodities, but I'm more on the FX, Australia and Canada.
Yeah, you go for the easy ones. Yeah, okay.
Make life easy.
Yeah, you make your life easier. However, bigger profits on commodities if you get a clear direction of the markets. This might be an interesting entry point for gold, but as you said, let's see what Jerome Powell will have to say later on. Right, what's happening with Brent oil or the European oil? 69.75. We see a very shy push to the upside, which only happened a couple of hours ago. Okay, nothing big has happened for Brent oil, and nothing big has happened for crude oil WTI either. Right, silver. Right, push to the upside after the opening bell for silver, currently trading at 23.852. With RSI stochastic apparently turning around and pointing upwards. So we might see silver trading a bit higher. Tesla tanked, big tank for Tesla, which last week was trading above $700, $728.49 was the all-time high for Tesla last week. Well, today's trading to the downside, 673.46, and dropping by the looks of it. Facebook, negative opening for Facebook. We see Facebook pulling back a bit today, 363.72, with both RSI stochastic pointing downwards. But we know stocks are more driven by the sentiment than technical analysis. Wow, check this out. Alibaba, very negative opening, if I can say that. 176.72 for Alibaba this afternoon. We might see a push to the upside, considering the relative strength index and the stochastic are literally off the charts. Check out how low in the oversold levels both indicators are. 176.73 for Alibaba, and now everyone's favorite, guys, the mighty Bitcoin, which seems to be pulling back this afternoon. 46.524 for Bitcoin, and Ethereum seems to be wanting to pull back as well after very decent gains on the European trading session. Right, Rian, what's your take on the markets today?
I'm saying I'm a bit dodgy on gold, actually.
I know you're dodgy.
But it's more to do, obviously, with the tapering word that goes around. But on an Aussie dollar, I don't know, did you notice on the Aussie dollar there was a possibility of a dead cross, one on the 200 EMA and 50. Yeah. Actually, I was noticing that in.
Go on, talk to me while I'm
and on the 1 day, and if I look at gold, for example, there was the same story there for a dead cross, and funny enough,
you have it on the charts. Go on.
Yeah, and then funny, there is actually the one. Let me just get to the Aussie. The Aussie on the 1 day, there the bugger is the dead cross. And that's why I'm actually on a heavy on that one. But obviously, that's a possibility. There is a lot of times when it actually flipped around also. But the same thing actually with the commodities. And it's funny, when I looked at it, nobody was talking about it. I was looking on YouTube. I thought I was looking at myself. Nobody's talking about it. And here is the same story if you look at gold. And that's why I'm a bit two-minded when it gets to gold in the Aussie dollar.
Yeah, looking at gold, we can see gold on your time frame seems to be retesting the moving averages. And if we're going to see them closing above, then probably we're going to look at a rally for gold and a drop in the US dollar. If we get a bounce, from those moving averages, then probably that's a good entry point for a sell position, for a short position for gold. Right. Okay. Very interesting. What's happening with the markets? We seem to be getting a bit of direction for the day. Crude oil WTI seems to be retesting the 50 MA to the upside after the US markets open. Where are we? There we are. Yeah, we saw a bit of a push to the upside. There's that 50 moving average and the retest. The sentiment remains negative for crude oil WTI as the new wave of infections seems to be advancing. We saw Asia having difficulties. We saw Australia having difficulties. And today, New Zealand reported its first case since February. This is a funny one. I mean, I know it's bad what's going on, but it's still funny. The first case since February, and the whole country went in lockdown for 7 days. That's
Absolutely. That is crazy. If you look at South Africa's statistics, then I think we'd have been in lockdown 10.
Yes, but you guys are very brave, very, very brave. Right, let's have a look at some trading signals now that the markets seem to be settling a bit. We're 15 minutes into the US trading session. We're looking at the euro and the pound versus the US dollar, showing 4 strong sell on all 4 time frames. Okay, so a lot of weakness versus the US dollar from the euro and the pound this afternoon. USD JPY seems to be a bit undecided. Yeah, we might see the shy sell on USD JPY turning into a buy, and continuing the winning streak today. USD CHF already turned into a buy and a strong buy. The Aussie dollar seems to be following the European currencies with 4 strong sell indications all over the board. There we go. The euro is strengthening versus the pound. What's going on in the UK? Right. USD CAD, strong sell on the USD CAD, and Kiwi dollar, obviously, it's following the Aussie dollar with strong sell all over the board. And check this out. As we get towards the bottom, Euro JPY, Euro CHF, strong sell on all 4 time frames. GBP JPY and GBP CHF, once again, 4 strong sell indications. Right, pretty clear signals so far. But remember, guys, this is not a secret formula. Now, Rian, let's have a quick look together at commodities markets and see what investing.com thinks about commodities today. There we go. Strong buy for gold, strong buy for silver after the opening bell. Copper, 4 strong sell all over the board. There we go. Crude oil WTI and Brent oil, strong buy. There we go. Your theory basically got smashed today.
I see it. Look like strong
Yeah, that's
buys.
on a 5 minutes and a 15-minute chart. However, yeah, the daily remains a strong sell still. So do your own analysis. See what's going to happen later in the session. Natural gas, strong sell for natural gas. All 4 time frames. And US wheat seems to be in between strong sell and strong buy, with sell and strong sell on 15 minutes and hourly, and the daily remains a strong buy. Right, mixed signals this afternoon on commodities, not as clear as the signals we saw on the currency pairs. Right. What's your view for today? Are you still going to be observing this afternoon, or are you going to try and get on the market?
Still observing and maybe waiting for tomorrow for New Zealand's interest rate decision. That one will be interesting.
What did they announce? Do you have any insight?
That's why they actually have that strong selling. It was all to do. I think they start to speculate now that the Reserve Bank of New Zealand will actually scale back on raising the interest rate, because they're expecting a lift in the interest rates of a 0.25%. But with lockdown 4 coming in and the COVID case or the Delta variant that came in, that's why they started to stop it. Or they allegedly they will stop it actually. So I don't know. It will be very interesting tomorrow.
Anyway, it's good for short-term volatility. Even if you can't make mid-term or long-term decisions on certain assets, it's still good to trade for short-term volatility. Right. This is it for today, Rian. Thank you ever so much for being with us today. Join me again tomorrow for your favorite event, the crude oil inventories, and let's see how the markets will do tomorrow. This is it, Rian. Thank you ever so much. I'll see you tomorrow. Right, ladies, gentlemen, traders, this was it from my side today. Join us again, same time, same place tomorrow for a new round of market talks. And until then, please remember to trade responsibly and may all your trades be in the money. This broadcast was sponsored by Markets.com.
Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.